Hey guys, it's September the 20th, and we're really kind of holding our breath here for tomorrow's announcements with the FOMC. So, in a lot of ways, like I said, this in between period is very much just, hold cash, find places to get into your favorite names that you've wanted all along, and then take the opportunities when they present themselves. Let's actually have a look at how the day is going so far for some context, and then I'm actually going to talk about CF Industries, which, although everybody is very keen on the complex, and I'll just go ahead and give you the spoiler, a bit bullish on this one. There's a reason why I always am a little more confident when I'm talking about phosphate and potassium than I am about nitrogen. So we're going to go through some of the briefs aspects of that. But before we get into that, past performance, it's not indicative of future returns. So if we're looking at the markets today, you're going to see a mostly red screen, and it's been kind of a slow, steady trickle downwards. So you had opportunities to kind of cover anything else that you had long this morning. Oil actually started out flat this day, and now it's down 2. And this really just tells you that you don't have people buying this market. Or when you don't have people buying, anyone that's selling is going to experience some issues at selling at the price that they might feel is the most attractive price for them. And that's just how it is when you've got a lot of uncertainty. You've got a lot of confusion, a lot of day traders, and an event that potentially is on watch. Now, I also want to show you a FinViz. You can kind of see there isn't really any market leadership, but you've got some standouts. Netflix up 1.73%. We know that that's from the discussion that was had just the other day. Some of the broker dealers coming out very bullish on Netflix. I'll do a proper thing, even though I did one after they reported earnings. It was a good earnings season, but I do think that there's some things with Netflix, if you're going to get into it right this minute. Anyway, so that's Netflix. And then Apple up a lot as well. Um, you know, to me, all of the big cap techs are a little bit oversold. Meta, you guys know what I said yesterday about it. That one, mixed bag, but in front of to like read into this anything with the FOMC coming out tomorrow, the only read that you can really have is that there are more sellers than buyers today. And that's probably not even that many sellers that would force this kind of issue to happen, in my opinion. Now, the odd thing is CF Industries, which I was so prepared on weakness today to be very excited about. And in fairness, even at 105, it's not the worst purchase you could possibly make out there. CF Industries is basically one of the world's largest nitrogen public companies. Okay. And that's really because, let me show you what I got here on it. That's really because these are your major nitrogen producers. China, I really want you to see the magnitude of this, because sometimes the news will just say a bunch of stuff very quickly and you'll be like, oh, okay, they're just naming them off. But I want you to really appreciate the magnitudes here. So China really does make almost 3 times the amount of nitrogen that we make. They're the 3rd largest producer, and right in the 10K. It's almost like a pop quiz to see if anybody read it. They will tell you, China is not running at 100% capacity of nitrogen. Nonetheless, China doesn't export nitrogen these days because it just doesn't feel like it. And I think there's a whole host of issues as to why that is, but we're going to get into that in just a second. But I just want you to kind of see, this is a big export for us, and the main producer of it, well, let me say it differently. This is both a main production element for us because we use a ton of nitrogen here in the United States, but we also do export it as well. Anyway, we are the 3rd largest. And then we have, if you really think about it, what nitrogen is used for. Nitrogen is used for, nitrogen is used primarily for fertilizer. Now, there's some people are gonna be like, no, May, the green nitrogen, the blue nitrogen, we use it for fuel, yada, yada. Those people need to relax just a little bit. They need to relax. Okay. Hydrogen is 1% of all the fuel usage out there. And quite frankly, in ammonia, only 13% of ammonia is hydrogen. So really, as much as we'd love to say that there are some that are like CF is a green energy play. First of all, that particular mill is going to be due to come up in 2023. So at this point, it's just a hydrogen play. And then, from there, we do need to see what's going to happen in the fuel mix. Now, I don't want to get too negative on those folks, but right now, if you're interested in CF, it really should be for the farming aspects of it, with a potential optionality in years to come of their ability to be on the hydrogen side. Now, these are the products of CF Industries, and ammonia is the main. Well, I'll show you what the breakout is. Granular urea and UAN, which stands for this. These are all used to fertilize, really. Ammonia nitrate, you could actually blow things up with that if you want, but there also are some farm-related uses that don't involve blowing anything up. And then there's a host of other kind of smaller industrial uses. NPK is really the smallest piece at this point, because a lot of that business was the British plants that they have subsequently closed down. And some of the other things that you kind of want to know here are fertilizer prices per ton, and this blue line is nitrogen, and you can see that skyrocketed up aggressively even before the issues in the Ukraine, but then it took another hit upwards. But even here, it's just so much more expensive than it's ever been. And one of the people in Wall Street that I really admire, Adam Rosenzweig and Lee Gehrig, they talk about this on occasion. Most of their work is in nat gas, but and we're going to get to why they then are incredibly knowledgeable about this stuff as well. But what we really want to observe from here, which they have said more than once, is that we are coming out of a period of not just low inflation, but low cost for some raw material inputs. Nitrogen is very important. If you plan on actually eating any food that comes from the ground, you're going to need nitrogen these days. That's actually one of the major ways that we solved the food shortage, was the use of NPK fertilizers. And there's a number of things that we did, as you can see, from 2008 to bring the price of fertilizer all the way down. In other words, this isn't the first rodeo we've had where fertilizers tried to dip its little head up. And part of the reason specifically with nitrogen is the nat gas. There is a way to extract it from nat gas as one of the throw-offs, if you will. And that does mean that the United States has a natural advantage at producing this stuff in the current state of geopolitics relative to other countries. Now, of course, if you look at this list of people that produce nitrogen, you got this guy right here, number 4. That's a big no-no right this minute. And so, that kind of is what it is as well. But from Russia, you can see how aggressively the numbers drop off. So Russia makes about as much as we do, but obviously it ain't happening right this minute for Europe. And then that's really the dynamic that has made CF so interesting to me. I usually stay out of nitrogen because the thing is, their input cost is natural gas. And if it wasn't that this whole conflict was occurring, it would be unclear who has well, it's not just the one conflict. We've got more than one conflict going on. But if it wasn't for those things, then what makes it sometimes a little bit unclear is who is able to produce it at a particular cost, and which government is there subsequently going to subsidize it at a particular cost as let's call it a poker chip at the table. Additionally, like I said, it is in the 10K from that went out in February from CF. They do mention that they know that China isn't at 100% capacity. So if they decided to just mow into this particular area, they could absolutely take the price down if they wanted globally. It's just not something that sounds like it's something that they're interested in doing right this minute. So that's something to take note of. And then just so you guys can see it, because I know not everybody's watching, the Henry Hub natural gas spot price, because this is the one you would use, especially since we're really talking about North America, South America. Really, it's North America production. This is the one you would use. And you can see how that has escalated, not just even through, that, not just even in the last 12 months, let's call it, but for a little bit of time. And that's after a massive fallout post 2008. Right here is really us innovating and discovering new ways to create nat gas and oil, pull it out of the ground. And that has really just been a wonderful decade of benefit for really pretty much the world as it relates. Anyway, that's a little bit off topic, but nonetheless, this is relevant because it does help you understand what's been going on as to why this might be doing that, because this is an input cost. Nonetheless, the U.S. is right now the low-cost producer of nat gas, and therefore the low-cost producer, given the current geopolitical situation. It's a big given, okay? Given the current geopolitical situation, it's going to be a low-cost producer among countries that are, let's call it, well, let's just be specific, Europe, okay? For Europe and Latin America right now, we're going to be the low-cost producer. That is what it is. All right. Nitrogen fertilizer usage. This comes from, I think, Our World and Data. I've mentioned them before. Nothing's changed. Mother Nature didn't change the way that land is put together. So this is still nitrogen fertilizer usage per hectare. And you can see Brazil, Latin America, but specifically Brazil. That's why we care about nitrogen, because this is probably how we're going to make it for the back half of the year in grain. And then obviously China, maybe not so obvious to some, huge usage of nitrogen, and then also up here in Europe. But also this actually, they do, Egypt does make grain, so this is very relevant as well. But they would probably get it from these guys, as far as, Egypt does make nitrogen, et cetera. So this one, while interesting, is less interesting for us here in the United States, looking at CF Industries. So that's kind of those are the quick macro, but I wanted to show you that portion for CF Industry before I go into the numbers, because there are several dynamics in nitrogen that always make it ever so slightly more difficult for the layman, for the average lady, to go in and really feel passionately that they've got a great thesis. Nonetheless, it just so happens that a couple more arrows are helping you out in this environment. There are folks that specialize specifically in nitrogen. I don't want to take anything away from those folks, and you should listen to them as you start to research in. But CF is, these companies all during this initial period, they were, for lack of a better way to describe it, a hot mess. Okay. In 2014, this was not a good period of time for any of the fertilizer companies. As a result, a lot of the best research in all fertilizer complex, let me just say it easily and directly that way, really comes from the high yield folks. They know these companies really, really cold. The only difference between them and us in the equities market is that they're more interested in whether they can pay back that debt, and they don't necessarily think in terms of what would then be the future prospects for them and how do we think about the equity, unless they're trying to hedge something. But in this case, there would be no reason to hedge this debt out, because it's just going to get paid back to you unless you got some kind of prepayment risk issue in your own portfolio. That's a different animal, because there's definitely a possibility that you get CF continuing to pay down debt. But as a result, you will find really fantastic research on all the fertilizer companies, CF definitely being one that had some, let's call it problems in 2014. But at this point, CF used to do a whole set of things. They actually used to be here in Florida, not too far from where I am currently hanging out. But they sold pretty much all their potassium and phosphate business to Mosaic. And so now they are a pure play nitrogen company. They are strategically attempting to move the business towards green nitrogen. And even they are preparing themselves for the day, knock on wood that it happens for them, that we use hydrogen fuel cells at an increasing pace than we're currently doing so. It's still just a very small portion of our energy usage. So that some people are going to have very, very strong feelings about one way or the other. But, this company is not the most expensive. Currently, the stock trades at something like right at $100. Today, it's at $105 because for whatever reason, the market's reacting in advance of me doing this just because I have dumb luck today. But, nonetheless, I just want to show you that does mean that this is their quarter. If you multiply that by 4, this thing is very cheap. Let's just get it from Yahoo Finance over here. So that I don't have to guess on the new metrics and look foolish, but it's 7 times earnings, 3.8 times enterprise value to EBITDA, and, paying down debt like crazy, which I'll show you. This thing is cheap. Okay. That's what I'm saying. But it's, let's just go through it. Here are the gross margins. You can see it's like a pretty sizable gross margin for this company. They keep about, for every dollar they spend, they keep about 60 cents of it, right? That's how you kind of read that. Just 1.9 divided by 3.3. So I'm off by a little bit, sorry. But you can see how aggressively gross margins have increased. That's economy of scale right there. Okay. For those of you that are still trying to feel the tactileness of this. And then you can see that, well, here it's not so much, but here, I guess on operating earnings, there's leverage, I guess is what I'm trying to say. So this is a huge uptick if you look at it, because this also includes the UK operating restructuring stuff. So what happened is, unlike us, the UK is not, like, while they may produce oil, they don't necessarily have the same infrastructure as relates to nat gas. And so it's really expensive to produce ammonia. So they basically closed it down and decided to ship it over because it's actually better to do so. Hence why I'm saying there's a couple of errors that are helping any beginner to feel like they're not going to just miss something very major in the research. So, you know, the stock got clobbered because it had to close down its UK operations. That is a misunderstanding of what's actually going on. And I will show you that very clearly. But you can see, as a result of the leverage here and the swing, that you've got net earnings from 246 last year to 1.1 billion. Okay. It's a big change in net income here that we're talking about. So that's really cool, right? And then, you know, sales is a double, but I'm going to show you why that sales being a double is incredibly interesting. Here, I've got a product breakout, but to just show you on the quick, or just to run to it, because I think I'm missing one thing that would have shown it cleaner. The fact of the matter is, they are not necessarily increasing volume to make that. That's just pure price action that's driving it. And I can show you the breakout here. Ammonia is a big part of their sales. Oh, I wish I would have shown it so you could see the product breakout. So just keep these sales numbers in your head. Ammonia is about, well, you got it. This is the 6 month, this is 3 month. I'm highlighting the things that I kind of want you to see, but here at the very top, if you just double that, that's approximately what they've made trailing 12 months. So about, you know, $3 billion worth of ammonia is what they're selling every year. The gross margins on that just jumped up 400%. Okay. So it's a real thing when you've got a shortage, for lack of a better way to say it. And sales volume didn't change at all. Okay. Here, urea, this is another way that folks get their fertilizer. You know, again, you've got about $3 billion worth of urea sold. You have only an 8% increase in sales volume, but you got about 146% increase in gross margin. So these are just, I mean, it is crazy what is happening right now in fertilizer. And then here again, this is AN. I always say this slightly off. The N is easy, but the A, I always say a little bit off. But ammonia nitrate, I think, is what it is. But this is what you, this has a little bit of industrial use, some farming use. And if you want to blow things up, you can do this. You can use this. You can see this went from not very profitable to quite profitable. You can kind of see that. It's about, you know, 40% gross margins. And you can see that that's despite less being made, down 13% on volume. And then the other stuff is really NPK. It's some diesel fuel additives. It's a whole mess of things. And also, I believe Europe, the Europe closures and restructurings are contained in here, and you still have these fantastic numbers with a decrease in how they're laying out that business, because they're going to reallocate to the even more profitable sides of the business, the same kind of raw material stock, so to speak. And so this is just really, really a fantastic thing to see. For this to really stop, you will need for either the US and China to make peace, or you'll need Russia to stop antagonizing everything over there, or really there's not too much else, or suddenly we're going to have a harvest like no other in this last quarter, such that there's no need to buy fertilizer in the Southern Hemisphere. Or all of Latin America decides it doesn't want to grow anything for the rest of the world. These are the things that would have to happen for poor CF not to actually do nothing short of fantastic numbers going forward here. That is why at 3 and change times EV to EBITDA, I agree with others that are quite bullish. This industry and this stock, there was an article, there are a couple articles that have been written, but these guys just haven't, this stock has just not been able to get legs since it first crossed the $100 mark, where even at 100, it was severely undervalued for the dynamic that we're seeing. But again, those are kind of risks. Let's go through a couple other places. I just want to show you, just so you can kind of see if you're still growing your skill set at looking through these different items. You can see inventories are only up a touch because it is what it is with this stuff. Okay, you can't. You've got plenty of cash, and you finally paid down a bunch of liabilities. Your current liabilities are very low. Long-term debt is massively declined. That's because they paid $500 million down with all that excess cash flow. And I'll show you that on the cash flow statement. You can see payments of long-term borrowing. That's $500 million right there. And this thing doesn't have a huge dividend at this point. It still does have some debt. Unfortunately, I didn't pull it up, but so you can kind of see it. Here, long-term debt of about $3 billion. But again, they make that just off of one of their product lines, which is ammonia. And then they've got a 60% margin on that piece of the business. So you can imagine this is not a big deal. I think their average cost of debt is just somewhere like 4.5. They've got some that's slightly under 4 and some that's slightly over 5. So this is not an expensive debt situation for them, and they're more than covering it with cash flow. So this is one where you would anticipate either this cash is going to be used to buy back stock, share buybacks, that sort of thing. The plant, I was looking at CapEx to see how much additional spend is going to happen to make everything more green ammonia, but most of that spend has already been incurred. And if we look at the cash flow statement, it's in cash flow from operations. I closed it down too soon. If you look at the cash flow from operations, the cash flow from investing, you'll see that the bulk of the spend's already done for that. And then you just have the last parts of opening that up in 2023 happening in this last quarter. So CF is one I just wanted to show you because this thing has been swinging around, threatening to finally actually break out, for lack of a better way to say it. I'm not even sure at this point why anyone would push it down. This is the chart here. Like it shouldn't have a 9 handle on it. It shouldn't be in the 90s. Is really what I'm saying. So anywhere in 100, if you've got any kind of meaningful horizon, you should give a shot. And that is despite the fact that, like I said, there are some things. The biggest and most notable risk is if China just decides to start exporting for some reason and wants to subsidize, or if we get resolution with Russia. But even then, with Russia, it's probably less. You still have a period where people are going to have, let's call it, issues. China's a different story. And with that, I will hit stop share and we'll take any questions on that. How you doing, David? I feel like I got together in describing.
CF, since you've been talking about it, CF has gone to 119.
Yeah, I mean, I think as I first started discussing it in the 80s, maybe below the 80s, like 70s or something like that. Then it went to 119. I was like, whoa, that was a little bit fast for me. And I took the foot off the gas pedal, but I've just been like, what is going on? I mean, I get it, potassium, phosphate, but maybe some people think that they can go a quarter and be a little silly about it. I still think that there's seasonality in this business for sure. People could buy just after they harvest, but right now for nitrogen, even if you're going to change your mix of potassium and phosphate, you still need to buy nitrogen for these plants, and especially if you're having any kind of drought situation. Do you know what I mean? Like if you want actual crops, versus just something that looks a little bit like a weed.
Another, as far as agriculture, SOYB, the soybean ETF.
Oh yeah. I
Yeah, I
agree.
mean, that looks like it's about to break out to the upside.
Yeah, I have a little bit of exposure on all of them. I have to double check and see if I how much soybean, but thank you for letting me know that. That's really cool. Um, yeah, I mean, it's look, I mean, it's a very strange world we're living in. I think you can play around with fuel prices by manipulating the markets a bit, and I understand that that may be happening and that they may happen for a period of time greater than you'd expect until it gets cold again. There's only so much you can play with food, though.
Yeah, agree. Again, it looks like oil is a good setup. I mean, this
To break upside or down, like
upside, yeah. Be patient, but like you mentioned, winter is just around the corner.
just around the corner. You got to get past. I think
Germany's,
get past next
listen
month.
to this. Germany's PPI was 45%.
Yeah, I mean, right now it's
And
just
it's about to get worse. Well, the
yeah.
government has to buy the gas, but still.
It's so fascinating to me. You know, I just don't. There's a reason why I prefer markets to politics. I can't tell how they're making their decisions. You know what I mean? It just doesn't seem like a set of the decision tree doesn't make sense for me for that particular company. Hence, I still like you can look all the way back. I have been short the MSCI Germany index, ticker EWG, for some time, and I will continue to short it.
Yeah,
When
they seem uncertain or confused, or can't make up their mind. I don't know. So
I don't understand their logic.
Right.
Yeah. So anyway, FOMC tomorrow. So just don't be too invested for those that can't have that ability. For those that are, consider some hedges between that, if there's anything still reasonable remaining. I guess we'll chat tomorrow.
Yeah.
Are there any other questions?
Well, the VIX looks like it's breaking out to the upside. So
yeah,
it looks like we'll hit those. I don't think we'll take out the June lows, but we'll get close to them.
Yeah. All right.
And you'll notice Microsoft and Google, they did not rally a bit in that run up. So there you go.
Do you have thoughts on that?
Well, they were good indicators that we're going to get a move down. But yeah, Microsoft and Google, if you'll wait till, maybe next month, then I think they're good.
Interesting. All right. Very, very cool. All right. See you tomorrow.